Today, I am joined with Rupert Carlyon, founder and managing director of Kōura Wealth, a KiwiSaver provider offering personalized portfolios including Bitcoin and clean energy options. With a background in investment banking, Rupert has led Kōura to over 300 million in assets under management. So, let's get into it. Welcome to the show.
Thank you so much. I'm really excited to be here.
Yeah, awesome. So let's just get started. How did you get involved in Kōura Wealth? What led it to starting Kōura Wealth?
So look, KiwiSaver has been the big thing in New Zealand finance world since 2006, when Michael Cullen first kind of announced that it was coming, right?
Yeah.
Back then, I was a young person in New Zealand's finance industry, working for an investment bank, and I went overseas in 2009 to kind of spend 6-7 years in London with banking there. Yes. And I came back to New Zealand in what must have been 2015. Yeah. And I realised pretty quickly that KiwiSaver wasn't anywhere near what people had expected it to be. It was a product that was dominated by the banks. People had limited options, no real ability to get much help with their KiwiSaver. Yes. And so kind of I thought, you know what? Here's a problem and let's figure out how we can solve that problem.
Oh, that's amazing. I've always seen the best startups start with the problem in mind and solving a problem instead of just coming up and dreaming up a random idea and thinking that we build it and people will come.
Look, well, it hasn't been easy. The problem with KiwiSaver is people don't care about KiwiSaver. And I think part of it is because we've done a really good job of dumbing it down and we've made it so simple, i.e., most people just think that it's a bank account. It's even if you think about the name, right? KiwiSaver.
Like a savings bank account.
It's a savings account, but actually, let's be honest, it's an investment account.
Yeah.
And so it was me with a few partners that launched Kōura. Yeah. One of the big things, in my view, is people need to be allowed to make their own decisions with their KiwiSaver. So it's their own money. We want to engage them. We want them to own it. We want them to make informed decisions about their KiwiSaver. And that's why we've kind of launched it very different to everyone else rather than the boring growth balance conservative. We've actually got 10 different funds that people can choose from, of which one of which is the Kōura Bitcoin fund.
Yeah. Oh, fantastic. So this is one way for people to get exposure to crypto apart from, just buying like retail on Binance or whichever platform they might be on. And what has your experience been? How has the uptake been for KiwiSaver? I mean, not for KiwiSaver, for Kōura Wealth, and especially the Bitcoin.
Yeah, look, I think it's been really good. We're really happy with it. It's been a good investment, and I think to be fair though, I'm probably a little bit surprised we haven't had more people in there. So we've got about 4,000 people invested in the Kōura Bitcoin fund. Yeah. I would have expected a few more than that, given that we know 10 to 15% of Kiwis have dabbled in crypto at some point in time. Yeah. But I do think that it's gone. So that's kind of the negative. The positive is for our investors that have gone in there, it's been a really great outcome. Kind of when we launched the fund, the price of Bitcoin was at $28,000. Got a little bit scary for a little while. We launched about 4 months before FTX. I had the regulator knocking on my door at that point in time. Yes. But look, today kind of sitting there at $94,000, life's gone really well and our investors have benefited the most.
Yeah.
I think the big challenge we have with that product, it's really overcoming the regulatory hesitation to let people go a little bit further and a little bit deeper in that product as well, right? Because look, I'm a Bitcoin believer, particularly when you look at what's happened in the last couple of days, where you've got Donald Trump interfering with the Federal Reserve and kind of the normal monetary system. It's got a few more risks around it today than it did probably 3 months ago.
Yeah.
But I do, and so I think one of the frustrations that I have, as many of my customers do, is the limits and the fact that people are only allowed to put 10% on. But I also think it really reflects the regulatory nervousness around Bitcoin and cryptocurrencies that we have here in New Zealand, which is, I find, frustrating personally.
Absolutely. Like you have had a lot more to do with KiwiSaver than most people in New Zealand,
Yeah.
What is it that you understand about KiwiSaver that most regular Kiwis don't?
It's an investment account.
Yeah.
And I think that's the biggest misnomer, right?
Yes.
And like all investment accounts, they need to be looked after, they need to be nurtured. The big mistake that Kiwis make on their KiwiSaver is that they just go to their bank, the bank tells them, hey, look, why don't you just give it to us, it's easier. They sign up and they just walk away. Whereas, as we describe it, KiwiSaver is there to help fund your retirement or help fund your future.
Yeah.
And good retirements are nurtured, they're built, they're not just kind of handed over. And so it's an investment account. That means you're constantly reviewing. Are you in the right type of fund? Have you got the right mix of assets for you and your objectives?
Yes.
Are you contributing enough? Or are you going to sleepwalk into kind of, we call it sleepwalking into a baked beans retirement because you're just contributing 3% and it's not going to give you anywhere near enough.
Yes.
And so there's a whole lot of decisions that you need to make on the way through to make sure you make the most out of your KiwiSaver. And I think that's probably the big misnomer that a lot of people just don't understand.
That's very, very true. But you know how they used to say that a good sort of investment is where you invest and forget, because sometimes the more you trade, and most people are not built out to be day traders.
100%.
The more you trade and more you fiddle with it, you can make mistakes.
I agree with that. And though you've got to remember you change, right? So
Yes.
you shouldn't be changing. So with what's happening in the world right now with Donald Trump and kind of where we see all of the trade war and all of that kind of stuff, that's not a reason to change. But all of a sudden you get to my age and you're getting closer and closer to retirement. And so that means over time I need to gradually de-risk my KiwiSaver.
Exactly.
I might have bought a house recently, or I might be about to buy a house.
Yes.
The person that's 2 years out from buying a house has got a very different KiwiSaver to the person that's kind of 35 years looking to retire.
Yeah.
And so I'm not suggesting for a second that we start day trading with our KiwiSaver and make constant ongoing kind of changes
as the market changes, because then
exactly. But you should be looking at it every year and going, hey, look, is it still right for me? A good example of this is one of the things that we see a lot with our client base as they go from kind of in that 45 to 50 to 55 age bracket.
Yeah.
When they come and speak to us at the start, they say, oh, no, don't worry about KiwiSaver. It's not going to make much of my retirement. It's kind of not much there at all.
Yes.
They get to the point of going, oh, fuck, I'm getting closer to retirement. Actually, oh, I can see it's quite a big number now.
Yes.
To the next stage, which is, oh, my KiwiSaver's dropped a little bit. I can't handle that. I need to do something about it.
Yeah.
And that's fine. That's just the mentality of when a pot of money gets bigger, and also as you get closer to needing that money. But what that also suggests is that your tolerance for risk has reduced.
Yes.
And because your tolerance for risk and the stress that is causing you increases,
Yes.
you should be changing, and you should be moving to a slightly more conservative option, because you're changing how you think, right? And look, it's just life. That's what happens as you get closer to kind of that end date. And so it's just one of those examples of, if you look at it every year, you go through the risk questionnaire, you really think about it.
Yeah.
Hopefully, 6 times out of 10, you make no changes. But every now and then you're going to go,
Yes.
actually, you know what? Something's changed, and I think now's an appropriate time for me to make a small change to my KiwiSaver.
Absolutely. There used to be this, saying or age-old wisdom that when you're younger, you should invest in higher risk, higher growth accounts, and then and as you get older, you should become more risk averse and more, growth averse, because growth and risk are correlated.
The same thing.
Yeah, the same thing. And more stability and security, sort of look for that.
There's been some really interesting research out of the US on this.
Yes.
There's 2 sides to that coin, right? One is often people are saving for their retirement, so they get closer to needing to use it. Absolutely. So that kind of means you don't want the volatility. But actually, the research shows there's also quite a big mindset shift as well, right? And as you get older, even if you don't need the money, people find it a lot harder to withstand losses and withstand stress.
Yeah.
And so therefore, even if you're kind of sitting there going, you've got enough and you go, look, I'm just going to leave it to the kids and I'm not even going to touch it. People find that increased volatility causes a whole lot of stress. And so you need it to bring that volatility down, which is bringing the risk down.
Yeah.
One of the big misnomers though, around that, what you just said,
Yes.
everyone says, you're young, just put it in a growth or aggressive KiwiSaver fund.
Yeah.
The problem with that is what happens when you're about to buy a house. And so because a lot of Kiwis use KiwiSaver to buy a house, when they're kind of 3-4 years out, they should be going conservative or balanced. We had a client last week who, because the markets are down quite significantly over the last couple of weeks, in an aggressive fund, and all of a sudden they don't have quite enough left for their house deposit.
Yeah.
And so look, it's just a little bit of a wrinkle that kind of goes against a lot of what that traditional advice is of when you're young, just go as much risk as you can.
Yeah, absolutely. And I mean, you can always do a balanced approach and all
100%.
that. And the other question I have for you is these days there are so many different KiwiSaver funds. How do you differentiate yourself?
So someone's described KiwiSaver once to me. It's like the craft beer aisle at the supermarket.
Exactly right. How do you differentiate?
You got 35 things just sitting there, and to be fair, we all look and feel and smell the same.
Would crypto be the thing for you guys?
Look, for us, I think there's a couple of things that I think about when I think about KiwiSaver, right? Number one is you go, hey, look, number one is, are they going to give you the help that I need? You might be an investor that wants extra help. You might be an investor that goes, I'm happy to do it all by myself.
Yes.
And if you want a little bit of extra help, make sure you find one of the providers that does that, right? I mean, a couple of the providers, because they're very low fees, they'll go, cool, we're happy to help you. Just email us and we'll email you back within 3 to 5 business days. Mm-hmm. That doesn't feel very helpful to me. And so it's all about you making your own decisions. So that's arguably number one. Number two, have a quick look at what kind of things that the scheme is investing in. For us, it's about Bitcoin, it's about clean energy, it's about high level of ESG, but it's about finding something that's got these asset classes, got these things that you like, that you want to invest in, right? Because it's your money, your choices to make. Yeah. And so that's kind of number two. Finding something that you like and it aligns with what you think is going to do well in the future.
Yes.
And then number three is looking at fees, right? And fees aren't everything. But fundamentally, there are some schemes out there that charge very, very high fees. I mean, there's one that charges kind of 2%, which I find amazing.
Insane.
It is absolutely insane, considering the returns are only meant to be 6-7% over the long run. So you're paying a third of your returns straight to your provider.
Exactly, and compounding.
Fees
also compound, just like profit. So
100%, right? And so look, that if I was kind of sitting there, and I know that's quite a hard thing to do.
Yeah.
But just kind of going, look, think about it along those lines. Can I find the help? Does it invest in the things that interest me? And then are the fees pretty high? Personally, I don't think anyone should be paying more than kind of just over 1% in KiwiSaver fees.
Yeah.
Because I think, look, that's where the broad spectrum of offerings are. But yeah, that's really the big one. The final piece that a lot of people talk about is past performance. So do you look at the historical returns? And look, it's probably the most successful marketing tactic that any fund manager will ever kind of talk about.
Yes.
And look, and even us, right? I'm very proud of the return that we've achieved over the last couple of years. Over the last 5 years, we're definitely top of the table. But we've been lucky. Like at the end of the day,
exactly
right?
When the market is good, everyone feels like a genius.
Exactly.
And then when there's bad, they take it personal and people get depressed. It's got
100%, right? So, and we've got really lucky. We've made some good calls. One of the big wins that we had over the last couple of years, for example, was NVIDIA. We were invested in a fund that was overweight NVIDIA. So that meant for the last 5 years that, so when we look at it over a 2-3 year track record, of course, it's gone really well.
Yeah.
That's unwound a little bit in the last 6 weeks.
Yes.
But yeah, that's why I just caution against using past performance, because research is very clear. What works in one set of market conditions, it's very unlikely that it will work in another set of market conditions. we look at what the last 4 or 5 years have been like in the investment markets,
Yeah,
it's all been about tech, right?
absolutely.
Which is US kind of growth companies and
The Magnificent Seven.
the Mag 7, all of that kind of
Yes.
stuff, right?
Yeah.
That's where it's all been.
Yes,
Right now, it's actually all about Europe.
absolutely.
And so it kind of shows, right? You can get lucky by some of those calls
Yes,
and you can get unlucky. But that's why you just be very careful if you're going to use past performance to choose your next fund manager.
absolutely. It's like, I mean, on the internet and then on in business or investing books, the traditional wisdom was that you just put money in a S&P 500 index fund
100%.
and forget about it. And like the last 80 years, it's done 8 to 10% compounding, and then you can beat inflation at 3 to 4%, and so you're fine. Does that wisdom still hold true, or is
100%.
it changing?
No, that still holds true.
Yes.
The only thing in New Zealand with KiwiSaver that we've got to be a little bit careful on is because New Zealand's very big on sustainable investing.
Yes.
And so therefore we can't really buy the normal S&P 500 and those kind of
Yes.
products. But yeah, typically what everyone finds is the just buying an S&P 500 tracker or buying an index tracker works really, really well. I think in the current environment, the one thing I'd probably, well, maybe because it's unwound so much over the last couple of weeks, but one thing we've forgotten about in the last 10 to 15 years is diversification. Because of the success of the Mag 7. Everyone thinks that the S&P 500 is all you need to own.
Which is mostly now over nearly half of that was the Mag 7.
100%. Oh, yeah,
Yes.
35% is the Mag 7.
Okay,
But I think we just want to be a bit careful that that kind of, normality will return at some point. US exceptionalism is unlikely to last forever.
Yes.
And so therefore just be careful, and you probably do want to be a bit diversified into more than just the S&P 500. And so one of the things I quite like is we've also got some MSCI all capital world funds, and just making sure you are diversified into some of that other stuff. And then the other piece around it, which is great, is when you diversify into alternative assets.
Yeah. So what do you mean by alternative assets? What
we're here today to do, right? I mean, theory suggests that 10 to 15% of an investment portfolio, or 10 to 20% of an investment portfolio should be alternatives.
Yeah.
Look, I think that crypto should be part of that.
Yeah.
Whether that's a 5 or a 10% allocation is kind of there. And then if you're in New Zealand, looking at things like some of those offers out of the Ice House where you're doing venture capital, a little bit of, private equity is kind of not really available to everyday investors.
Yes.
But a little bit of property. But I think that's kind of how we think about portfolios and structuring an investment portfolio.
Fantastic.
And I think that's how we would like everyone in New Zealand to think about it, right? Because that's solid portfolio theory.
Well, just looking on the crypto side, on alternative investment side, what's your view? Would Kōura provide, I don't know, exposure to other things apart from Bitcoin, or would it?
So it's a really interesting question, and I'd be interested in your perspective on this because you're far more knowledgeable of the sector than me. But when we launched our fund, we called it the Cryptocurrency Fund.
Yes.
Because, look, I'm a traditional finance guy, and my view is you want diversification. You don't want to be all in on a single asset.
Yes.
And my thoughts were that over time, we'd start with Bitcoin, and then we'd look to bring in Ethereum, Solana, a whole lot of other stuff as well underneath it. Yes. I think after we launched the fund, we spoke to a whole lot of different investors who were very clear, and the big kind of crypto people in New Zealand, a lot of them kind of were very clear around saying, hold on a sec, no, this is our retirement savings.
Yes.
We're happy with Bitcoin because we see Bitcoin as by far and away the safest of the cryptocurrencies. And so therefore we kind of want it to stay there. The other point around it, which I think is kind of important, is Bitcoin's kind of now out on its own, right? It's somewhere between a store of value. But everything else, it's a technology play, in my view. So it's kind of whether it be Ripple, ETH, Solana, Avalanche, whatever, right?
Absolutely.
They're all
right.
kind of a technology play, which is, it's a blockchain, and
Yes.
I don't know which of those are going to win. Whether, I don't know which is going to be Google, which is going to be Yahoo, which is going to be Alta Vista, right?
Yeah.
And I think we're still in those kind of days. And
Yes.
so I do like the idea of having a diversified kind of index style fund that does all of those things together.
Yeah.
The big question in my mind is, do I do that in KiwiSaver, or do I do that
As
outside
an
of
independent fund.
outside of
Yes.
KiwiSaver, right? Because I think something like that has got a lot of attraction.
Yeah. So you mean like an ETF type of a thing?
Yes, potentially. Yeah.
Yes.
So I do think for New Zealand investors, having a fund like that would be great.
Absolutely.
Because they get diversification, they get low costs, it's easy to invest in.
Yeah.
I'm just not convinced that it starts in a KiwiSaver world. I think it potentially starts outside of KiwiSaver.
Yes, absolutely. And also there is like on a I don't know, like a society level, there is another challenge in New Zealand is getting people to think outside of property,
Oh,
which is hard. Like, every barbecue or everywhere, it's an investment discussion. If it happens, it is just limited to property and nothing else.
so many of my friends, it's kind of like, I just want to buy my first rental property. I just want to buy my first rental property.
Yes,
And it's, look, from someone like me, it's very frustrating.
Yeah.
But yeah, it's a really hard one. But I think that's where I see my role as part of this, is going, how do I educate people? How do I educate people and give them options
Absolutely.
such that they can do a whole lot more, right? And I think in the crypto space, it's really interesting, right? Because it's I'm the only traditional finance person
Absolutely.
that's willing to kind of stand up and actually say, no, hold on a sec. Bitcoin is a legitimate asset class. It's something that we should be investing in. And I also personally believe, similar-ish to what BlackRock's done in the US, how do we kind of make this asset class more legitimate and make it an easier proposition for people to invest in?
Absolutely. And how do you think we'll get there? It's like, this type of news is coming out every day. The latest news is like Canada approved Solana ETFs with staking or things like that. Because what people don't realize is that with a lot of these cryptocurrencies, you can do things like staking or liquid staking, or there's like a whole lot of things. But once again, they are kind of like a bit of a tech play. But then in the tech play, you couldn't stake your tech stocks
No.
or restake or liquid stake your tech stocks. And in this,
You kind of can, actually. Well, it's hard to do as a retail investor, but
it's hard to do.
it's very hard to do. But you can lend them to someone for a short, and then kind of take the and then be paid an interest rate on some of that. So actually, that's why I find, because I actually find it fascinating, right?
Yeah.
We've got all these in the crypto world. We've got all of this terminology and all of this stuff.
Which is, yes.
It's just traditional products with a slightly different kind of flavor on them.
Yeah. Yes and no. Yes and no. Because then that staked stocks or equities are not really used to secure the network.
Yep. No, I agree with that.
It is used to secure the network, and it has a utility where it didn't, which was purely as a lending, borrowing. Of course, those things also happen in the crypto world as like lending, borrowing, and of course a lot of them are risky or but there is slightly more utility, and I think these would be unlocked, but I don't know how far away we are in New Zealand, how many years behind we are, or
I think there's two big problems here in New Zealand, right?
Yeah.
I'll be slightly. One is size.
Yes.
As a market which has only got 5 million people here, in a market that's obsessed with property, it's actually really hard to build investment products for this, right? I mean, I look at my Bitcoin fund, where I think, what have I got? 4,000 members in that. And it's, let's be honest, it's one of the only options available for people that want to invest their Bitcoin in KiwiSaver.
Yes.
That's pretty small. Yeah. I look at, so I'm going to go, so if you're going to build it, and then the second problem that you've got in financial services, and again, it depends on how you build them, but if you want something that fits into the traditional mold, right? So an ETF or a fund or something like that, it's actually really hard to do cross-border offerings.
Absolutely.
So, because every country you go to has a new set of regulatory rules and regulatory regimes, like Binance, for example.
Yes.
How they operate here in New Zealand is slightly different to how they operate in Australia, very different to how they operate everywhere else in the world.
Yes.
And so you have this challenge of, I build a product for
Scaling.
New Zealand.
Yes.
How do I get that out? And how do I do that? ETFs is one way, but then I come back to my second problem, which is no one's buying anything on the NZX. So therefore launching an ETF on the NZX is pointless.
Absolutely. It's kind of the big get bigger, and it's so hard. Scaling is not easy, and it's like, that's why I admire like what Binance has done with nearly 260 million registered users.
100%.
It's not a small feat. How do you grow something to that scale? Like, it's very hard from New Zealand.
I think so. I mean, the Easy Crypto team did a good job.
Yes.
But even that, my understanding is that that's still largely a New Zealand business.
Yeah, they got acquired not that long ago, just a week ago or so. I mean, 2 weeks ago or something like that. Sometime soon.
But I think that's the problem, right? So it's about, and that's the challenge for me when I kind of look at a lot of these. I can see some quite cool products that I'd love to build.
Yeah.
They're not easy to build though. Yeah. And then I go, if I can only get 4,000 people into my Bitcoin fund, this is slightly more niche, slightly more complex. It's about going, how do I get more volume, right? Because if I sit there and go, I need $100 million worth of assets to make it worth my while.
Yeah.
How do I think I can do that in New Zealand? So anyone listening's got any ideas, I'd be keen to hear.
Absolutely. Yeah, so I was sharing about, like, I've been in the startup space for ages. I've built a couple of startups and had a couple of exits. And every time I've worked in so many different places around the world. The two things that any startup needs is access to market, which can be volume, number of people, number of users, number of accounts. And then the second one is access to capital. And I feel like both the things are missing in New Zealand, or you have to work a lot harder to get those things.
I reckon they're quite related, to be honest.
Yes.
And I'll tell you why. I think that the market in New Zealand is hard, right? Because it's a very, like, let's be honest, we're a small country in the bottom of the South Pacific, right?
Yeah.
If you want to grow and you want true scale, then basically what you have to do is you've got to get yourself on a plane and you're 12 hours away from anywhere.
Exactly right.
And I think that's the real challenge that we face, right? And particularly in our world, in the financial services space, the regulatory differences between different countries, it makes it really, really hard to grow elsewhere. And I think that's what makes it hard for capital, because the capital providers don't understand the international stuff, and they don't understand all of that international model that kind of you need to do. I actually think there's a lot of capital available in New Zealand.
Yeah.
But what we don't have is we don't have the professionals here in New Zealand that understand how to grow, scale, and support early stage businesses.
Absolutely.
I'll give you some examples, right? Yeah. So if you think about it, right? KiwiSaver, it's currently a product with, let's say, it's got about $120 billion inside that as a product, right? Oh, look, I would be surprised if there was more than $50 million invested in venture capital the whole way through. That's just too low when you think about it from a perspective, right?
Yes.
Do you then have the wealth managers here in New Zealand?
Yeah.
The domestic wealth managers will have, I think, but the four largest between them, I suspect have got another $150 billion to invest, of which 20%, or let's call it 30%, is probably invested in New Zealand.
Yes.
And then the remainder, so let's call that the first $50 billion is invested in New Zealand.
Yes.
The remainder is all invested offshore. And I think the problem is that, so if you're a really good venture capital person, and you're really good, you sit there and you go, cool, I can be here in New Zealand, and I can work really hard competing against 5 other venture capital firms, all chasing the same deals, all kind of looking for the same companies that are going to struggle because they've got to figure out how they can get their scale offshore from New Zealand.
Yes.
Or if I'm a really good venture capital person, I can go live in San Francisco.
Yes.
And I can be one of 300 venture capital firms, but chasing companies that are kind of going after the US market, after the European market, or I can go to Hong Kong. And I think that's the real challenge we face. It's actually because we don't have the scale and it's so hard to build startups from New Zealand, it means we haven't had the big wins. We haven't had the profile, we haven't had the big wins, and we therefore don't have the success and experience in our industry. So it means we don't have the ecosystem. Because the capital is there. That I do promise you. There is so much money floating around New Zealand at the moment. It's just about going, how do we get smart people to understand exactly how to use it? Does that make sense?
Absolutely. So you mean there is a third factor, is the lack of expertise, not only lack of capital and
I think it's a lack of expertise. Because it's about, and the New Zealand psyche is completely wrong in a lot of this stuff, right? It shows a very old school naivety. And coming back to your property analogy that you said before, right? I mean, for example, when a company goes bust on the NZX, it's front page headlines for like 3 weeks. Whereas the law of capitalism suggests that 10% of companies should go bust every single year. It's just life. It's just part of how it works, right? So there's 100 companies listed on the NZX. So therefore, according to the numbers, 4 or 5 should be being destroyed every year and going bust. That's just, capitalism is another word for creative destruction. You should have 10, 15 coming in every year and 5 or 10 going out. As New Zealand investors, we haven't been educated in this process. We don't understand that this is why you diversify. This is why you've got all of these things that you do.
Exactly.
And so therefore, we're only willing to invest in things once we see them as being safe. And I think venture capital, it's even worse in that, and kind of in that early stage, because not only are we asking people to invest in stuff that they don't really understand because it's technology based, it's kind of offshore based, but also getting people to understand the venture capital early investing model, which is, hey, my fund is going to invest in 15 different companies. I expect 8 of them to go bust. But 7 or 8 of them are going to go, or 2 or 3 are going to be fine. 2 or 3 are going to go really well. That's just it's a different mindset and a different model for New Zealand investors to accept and understand.
Absolutely.
And I don't think we've got the expertise though to kind of go, hey, look, I see your model over there. I can see how I see that fitting in the US market or in China or wherever, and going, and here are some connections that's going to help you really make that happen. Because that's the other thing I think you'll find here about, and this is potentially harsh, some are better than others, but what you'll find about the New Zealand early stage investors, they see their job as handing over a check and walking away. Versus going, here's the check, here's my Rolodex of contacts that's going to help you, and here's some strategic advice as well, which is what you'll get from a lot of the offshore investors.
Yeah, absolutely. I mean, of course, there'll be a mix.
There is a mix. I accept that.
I mean, overseas as well, there'll be a mix, and over here as well. But just that there is a abundance of expertise in some clusters. Like could be Bay Area, could be like if it's finance, it's New York, Dubai, Singapore, Hong Kong, London. Like there is enough of a density of the, I don't know, whether it's experienced software developers or experienced people in fintech or AI or whatever field you want to go to, that you can cross-pollinate ideas, validate ideas, build things together. And that is, to a certain extent, it's missing to the same level.
I agree. And so I think it's an interesting one. I'd love to see that ecosystem become a whole lot deeper here in New Zealand. How that happens, I'm just not sure.
Talking about all the new things happening overseas, it's like I was just reading, like SEC is currently reviewing 72 ETF applications just in crypto alone, and I don't know. I feel like there isn't that much happening in New Zealand comparatively. I mean, this is something we were talking earlier before I pressed the record button, and you had some views on that.
I think that the two problems that we have in New Zealand is it's scale. Well, scale is the big problem, right? I build a product here in New Zealand. Even if I lodge it as an ETF, the fees of doing that are very high, and the potential uptake is very small. And so I struggle to understand that, and I think unfortunately that dilemma keeps on getting bigger and bigger, right?
Yes.
As an investor, as an advisor, I can go tell my clients, you can invest in a New Zealand Bitcoin ETF at 1% or 1%
Yes.
Or you can go straight on using your Hatch or Sharesies account.
Yeah.
You can go buy exactly the same product in the US, and you're going to pay 0.25% annual fees. And we talked about the importance of fees before.
Yes.
The second problem is that you end up with significant tax advantages. So we've actually had quite a good look at this as well. You get significant tax advantages via owning via an ETF versus owning directly.
Why is that?
So because an ETF is taxed under the foreign investment fund rules, which means you pay a maximum of tax. So you pay tax on a maximum of 5% of the asset value or the gain or loss. And so that means that if it's a loss, you take a tax deduction. If it's 100% gain, you're only paying tax on 5% of that gain. Whereas if you own it directly, and as a fund, if I own Bitcoin directly, then I'm taxed exactly the same as how you are taxed when you own it individually.
In that way, it's discouraging people to start funds here, in a way.
100%. The tax rules make it. The only way I could legitimately do it would be by investing in other offshore funds, which gets really expensive. Because that's the only way that I can kind of say to my investors, hey,
then you're paying double fees, or the retail investors.
Well, we do, because it's kind of higher fees, and it's but the tax rules make it really, really hard, and so I've got a tax disadvantage to making it, so it makes it hard to start with, and I'm unlikely to get scale
because of the
small population and small size of the market. And then that means that the scale means that I'm unlikely to get the volumes that you can get if I are the offshore guys, which means it's always going to be more expensive.
Yeah, awesome. I mean, not awesome. I mean, it makes sense. It makes sense. That's what I mean.
And so I think kind of in what this conversation's making me kind of realize is that earlier on in the podcast, I talked about how I want to build other products.
Yes.
Probably the truth is what we need to do as a better job on is advise people on how to use the products that are out there. How do we set up advisory that kind of actually brings traditional finance together with alternative assets, allowing people to kind of figure out how and where they can access crypto, and actually having a really good conversation. And this is definitely more for the finance-orientated people than for the kind of the true crypto believers. But it's about going, hold on a sec. When we look at your portfolio, are you better owning native? So therefore, are you better off having it as a Binance account? And there will be some reasons for that. Or are you better off holding via an ETF, and we can access the ETFs, whether they be staking ETFs in Canada versus the vanilla ETFs in the US. There's a few in Europe that are starting as well. There's a whole world of new ways of looking at this, which I think actually...
that's where expertise comes in.
100%. And that's, I think, probably... maybe that's the role that people like us need to move to, is going actually, rather than trying to create products, educating people on how to better use the products that are there. Yeah,
absolutely. We already talked about few different things. I've just got two more questions. I'm just really enjoying this because I feel like I am learning quite a bit about the whole financial or investment ecosystem of New Zealand. We did talk about a lot of barriers of setting up things here. What about the good things? Are there any, or what are the good things of setting things up in New Zealand or building this type of business or startup in New Zealand?
I think that the good thing about doing stuff in New Zealand is the small market, on one hand, has its challenges with scaling.
Yes.
But also means that you can be first to market with some interesting, innovative ideas. That's also got its challenges, and that means if you've got something brand new, you need to educate an entire market. Sharesies did a great job at kind of bringing online investing to new, or not bringing, sorry, but they did a great job at making it easier, making it more accessible, and making it a whole lot better than where it was. So I think the advantage of the New Zealand system is one is that size. So that means that you don't actually, there's limited competition in a whole lot of these segments, and a whole lot of these sectors. The second big advantage is everyone knows everyone.
Yes.
And so it means that, you know what, if you've got an interesting opportunity, and New Zealand is also very welcoming, right? So if you've got an interesting idea in crypto, for example, I mean, they're going to find you. They'll find, I get a lot of people coming and knocking on my door. New Zealanders are very open and very happy to help. And I think
absolutely, you can ask anyone for a cup of coffee and bounce ideas and all that type of thing.
And there's a lot of that there, so it's a very helpful ecosystem.
Yes.
And I think probably those are the two big advantages. And I do think, look, and for good ideas, I think there is capital there.
Yes.
It's just got to be a good idea, and it's got to be done in a way. What we don't have is that kind of pre-seed funding.
Yeah.
That round one where someone's basically in the US, you can raise $100 million with a pitch deck, whereas in New Zealand you'll get $10 with a pitch deck.
Yes. Also, even in US, what matters is geographic location. If you are in the Bay Area, you would raise 20 times more money than you are in, I don't know, South Dakota or somewhere like a small town. So, and we have that small town energy over here.
100%.
So, which is understood. And so it's getting out of that and just being very capitalist initially and then come back and build. That's what I would do. Get the money to get started, and then once you have some proof, it's much easier.
100%.
Once you have a name built, and like personal branding helps, and as a founder, in any field.
New Zealanders trust people, right?
Yes.
They trust it's a trust market.
It's a trust market. So So instead of the pitch deck, it is you are the pitch deck.
Yeah.
Founders the pitch deck. Yes, pretty much. You raise based on connections and things like that. Yeah. I have my second to last question is that if you were starting Kōura Wealth now, if you're starting this company now, what would you do differently?
A lot. I mean, I was naive, short and simple. I was very naive. I didn't understand getting customers to change, getting customers to behave differently. It's a massive challenge, right? That's what my business is all about. It's about getting people to take charge and take control of their KiwiSaver, right? I'm fighting against the tide on that story, right? Because I've got the banks who are saying 70% market share, and they're saying, don't worry about it. It's just a savings account. Leave it alone. Why? You just want to look at it in your bank app, don't you?
Yes.
And so I think I probably took too long to realize that two things. My business was all about marketing and technology.
Yes.
And really, so what we didn't do is we kind of focused on finance. KiwiSaver, it's a finance business.
Yes.
You've got to get finance right.
Yeah.
But when you got a business that's set up by 3 finance people, getting the finance right is really easy.
Getting the marketing, the go-to-market, those types
all
of
those things, it's really hard, right? And I think if we had our time again, we would have gone in with a very different approach on all of those kind of things. And I think also really challenging ourselves on what is our true point of difference. And so if I was going to do anything again, the big thing I'd make sure I did some proper market research first.
Yeah.
Again, the 3 finance people, we came in with a hypothesis.
Yes.
Which technically is the correct hypothesis and the conclusions. It was just people didn't recognize the problems that we saw. And so someone once said, I was about 2 years in, battling for growth, and then someone said to me once, they said, yeah, you've got a good proposition, you've got a good story, you've got everything kind of makes sense.
Yeah.
The problem is you need to get the entire industry to think differently for you guys to succeed. And if you've got a $20 million marketing budget, we can do that.
Yeah.
But if you don't, good luck to you.
Yeah.
And then that's kind of where we've had to pivot and think harder about distribution, thinking about really pushing harder into how we differentiate ourselves, which is why one of the reasons why we did the Bitcoin fund. But yeah, there's a whole lot of stuff that we'd do differently, but that product market fit, which I know is the most talked about thing, I'd be probing that a whole lot harder before I started to really figure out where and how I can kind of differentiate and have that fit.
Yeah, that's fantastic. I mean, that's an advice for pretty much for any founder. Not only in finance or fintech or any in this field.
Any business,
pretty much any business. Yes. And finally, do you have a ask? Is there anything that you're looking for, or how can people connect with you? Feel free to share.
Oh, look. Hey, we love being part of this world. I love the crypto world. With Bitcoin, Binance has been a good supporter of mine over the last couple of years as well. So I really do have to say thank you to them, and I think they've done an amazing job here in New Zealand. Look, the thing I would ask of everyone is going, if you're into Bitcoin, you like Bitcoin, come and have a look at Kōura Wealth on our website and kind of have a look and think maybe it's time to put a little bit of Bitcoin in your KiwiSaver. Yes. And talk to your friends about doing the same thing, because fundamentally, if we want more finance products and we want to kind of close this gap between the crypto world and the traditional finance world, we all have to do that together, right? I can't do that on my own. I need you guys to help me by jumping on board on these products. The more the more volume we get in that, that's when I can go back to the FMA again and kind of have a second conversation about the limits, having a second conversation about the different fund types, all of those things. But I can't have that at the moment because I don't have enough scale. Yeah, absolutely. Makes sense. It's like chicken and egg, right?
Thing,
we need to get the FMA to stop thinking about us as stop thinking about the Kōura Bitcoin Fund as a small niche product. Once they realise that it's here to stay, that it's doing great things, then we're going to be allowed to do a whole lot more in this space as well.
Fantastic. So thank you so much, and hopefully you'll get there in due time.
Oh, we will. We're getting closer and closer, and look, every day's good for us. Most months are a record month for us, and so, but hey, like all kind of all early stage businesses, we just love to go a whole lot faster. Yeah, absolutely. So what I'll have to do is I'll have to invite you again, because there's still so many things I didn't get a chance to talk about, especially everything happening in the US economy and everything changing. But there's and so much that I would have liked to share on the Bitcoin side of things, on the tech side of things, of different. But let's continue this conversation in a couple of months' time. Oh, that'd be great. Yeah. It'll be a very different story in a couple of months' time with how quickly the world is moving right now as well.
Absolutely. There will be a lot more executive orders in the meantime, and even probably by the time this is published, things would have changed a lot.
Well, I mean, even overnight. So what day are we today? So we're late April. And even overnight with the US Federal Reserve kind of challenges and Bitcoin prices up 10-15%.
Absolutely, yes.
Correlation with gold is getting higher, and look, it's going to be fascinating. I can't wait to come back and talk about all that stuff as well.
Yeah, absolutely. I mean, there's so much. Like, I saw if you go and look at the graph and the data on how the gold price changed pre-gold ETF and post-gold ETF, and the same thing is happening with Bitcoin, and that's why now Bitcoin is 65% of the crypto market. It's as if there was only one stock in S&P 500 that made the 65% of the market. So that's what we have in crypto.
Do you know what's even better about that set of stats?
What's that?
So we just think about Bitcoin, right? Bitcoin's a single asset, but it's kind of it's the entire industry. And what I find fascinating is that Bitcoin's got a $2 trillion market cap. Yeah. It gets probably 15-20 times as much noise as Apple, Microsoft and Facebook combined. Those three companies have got kind of what have they got between them? They've got close to an $8 to $10 trillion market cap. It is still tiny in the scheme of things.
It is still tiny, yes.
And that's what I find fascinating, right? Just by share of noise and share of kind of attention, it's kind of likely to go a lot further.
People who like Bitcoin, it is their part of like a cult in a way, you know. It is a tribe, and it is a very, very strong tribe. It's like Apple used to be, or Tesla used to be. People used to have Apple stickers and Tesla stickers and all this, and merch and everything they used to wear. But it is a very, very like a socially interesting phenomenon that like Bitcoin doesn't have a centralized authority organizing this, printing out stickers, printing out T-shirts, but you still people see with those things.
Oh, yeah.
and it's completely a decentralized tribe, which is or organization, which is the most interesting thing that I find compared to anything else, because we've never had anything of this scale, so decentralized.
Yeah, no, I agree. Though people aren't going to like to hear this, but I suspect that BlackRock will become the centralized tribe. They'll become the biggest supporters and the biggest pushers of it, is my guess.
Yeah, I mean, this is once again, like, if you look at anything, it needs, like, as you said, it needs volume, it needs liquidity. Every time the crypto markets have gone up, it is because the new liquidity has come in.
Yep.
In 2021, every government printed money. I mean, this is just data. This is just facts.
Yep.
Nearly everyone in the
Yep.
world, not only US. It might feel like only your country printed money, but no, every country printed money. And then that extra liquidity went in the stock market, stocks went up. It went in the crypto market, crypto went up. So what did bring in liquidity later on in this cycle, in the last year or so, or year and a half, is the ETFs that brought in the liquidity. So liquidity has to come in. Some money has to come in from somewhere, from externally. And that's what this is. So we'll see what the next big event, which we don't know would be, but we'll see. Yeah. But it's still very, very interesting talking with you, and wish you best of luck for continuing.
Thank you, Sam. Looking forward to chatting again.
And educate people in New Zealand about crypto. So thank you for that. Thank you for tuning in to this conversation with Binance New Zealand. Make sure to subscribe, follow, and engage with Binance New Zealand on social media. You can find us on Twitter at Binance_NZL, or on Instagram, Binance New Zealand, one word. As well as you can also go to our website at binance.com. And finally, please note that this discussion includes insights from non-affiliated third parties and key opinion leaders. Binance provides this platform for informational and educational purposes only and is not responsible for any content or insights provided. This information should not be considered as financial, tax, or investment advice from Binance.